Ethereum, the road to 2.0. Big use cases have been announced for Ethereum and related dApps, and is the rich list a problem? Let's start today with that price action. Ethereum is showing a lot of strength currently, doubling in price since March. At the time of recording, Ethereum is around $260 each. If the momentum continues in the markets, I could easily see us breezing past the $300 mark, but that $280 zone where we have seen the price rejected just the other day is a tough zone of resistance to pass and may require a few tests before actually breaking over the 280 mark and breezing past 300. Now, a report came out the other day from Chainalysis that Ethereum whales hold 1/3 of all Ethereum compared to Bitcoin where they control 1/5. Just 376 people have more than 30% of all Ether. The research did exclude exchange accounts. Now, the 376 Ethereum holders are responsible for a relatively small volume of transactions, approximately only 7%, and therefore don't actually have a strong influence on the price of Ethereum. However, when these addresses do activate to sell off large amounts, they can actually have large effects on the crypto markets. On the face of it, that sounds kind of whacked. But when we remind ourselves that wealth inequality is prevalent, and for example in the US, 3 people have more wealth than the bottom 50%, or perhaps even more worryingly, that the 26 richest people on Earth in 2018 had the same net worth as the poorest half of the world's population, or some 3.8 billion people. So we're still better than the fiat system, guys, by a long shot. Joe Lubin recently commented on Ethereum 2.0, stating that we will see Ethereum become 1,000 times more scalable within 24 months. On the one hand, that's a damn long time. On the other hand, it's not that long at all in the big picture of things. But it seems longer when we realize how many other blockchains are currently faster and or cheaper than Ethereum and are, in one way or another, working today. But Ethereum does retain a very strong network effect with massive partnerships, a huge developer community, and various projects like Matic or Omisego and Raiden, all building out scalability for Ethereum. The testnet for Ethereum 2.0 has been launched just a couple of weeks ago by Prismatic Labs with staking implemented. It is just a testnet, but it is worth remembering that Ethereum 2.0 is a multi-year effort to create a fully decentralized, permissionless platform for programmable cryptocurrency, and that the move away from proof of work must be done correctly, as billions of dollars in value are at stake here, and retaining high security and decentralization must be adhered to. The key pieces of the Ethereum 2.0 upgrade are as follows. Proof of stake, switching how Ethereum is mined, how the network is secured, and how new coins are created. Sharding in order to increase scalability and transaction speed via splitting the large database into smaller, more manageable parts. EWASM, this allows for codes to execute faster, among other things, as well as expanding coding options and the capabilities for the Ethereum virtual machine. Then, of course, we have Plasma, which is an extra layer that sits on top of the network that can essentially handle massive amounts of transactions. This is being approached by various teams at the moment, with Omisego continually being delayed, but with Matic close to releasing a Plasma mainnet. Scaling could be happening way sooner than we expected via Plasma, which is a great thing. Raiden, while not discussed as much these days, has certainly not disappeared and remains a scaling solution much more similar to Bitcoin's Lightning Network. ZK Snarks being looked at for transaction batching, and that's kind of just the tip of the iceberg in terms of what's actually happening in the background right now in terms of building Ethereum 2.0. And those are the big things that are being pushed forward, but there is a lot more happening than that. I also saw an interesting take on Ethereum by a guy named Ryan Adams over on Twitter the other day, and I wanted to kind of share that with you and get your opinion on this. And the idea is this, is that Ethereum is an economy without a nation state. So more than just being a non-sovereign currency, Ethereum is a non-sovereign economy. Ethereum is permissionless like the internet, censorship resistant like BitTorrent, and a public good like TCP/IP, essentially a decentralized financial system for the world much like you might imagine the United States being, but Ethereum is an economic network, and just as the USD is the reserve currency of the United States, Ether is the reserve currency of the Ethereum economy. It is actually a really interesting analogy. I want to get your opinion on what do you think? Is Ethereum comparable to an economy without a nation state? Let me know about it down below. On to the next segment. Unpatched Ethereum clients pose 51% attack risk. Apparently a large number of nodes who are using the most popular clients, Parity and Geth, have been left exposed for extended periods of time as nodes have not run required updates to the latest software even after patches for security flaws have been released. The result is that large numbers of clients are potentially open to attacks. The whole Ethereum network, which relies on having nodes highly available, is vulnerable, since if a coordinated attack was carried out on these Parity and Geth nodes at the same time, it would essentially make it easier for an attacker to be able to gain the necessary hash rate to control the network. Now, it's worth noting that while technically possible, it is still a big stretch to assume that such an attack could actually be successfully pulled off, but does serve as a reminder that if you are running a node, then please ensure to keep up to date with security patches, guys. The issue has also brought into the conversation the need for more reliable processes for the auto-updating of clients. Bosch, the German industrial giant, which makes everything from toasters to car parts, and which has a 78 billion euro yearly revenue, has laid out a vision of the economy of things running on the blockchain and leveraging the power of smart contracts. Together with EnBW, a publicly traded electric utilities company with 22 billion euros in yearly revenue, Bosch is working on a prototype of a blockchain-based car charging station. The project, while being pushed by the two corporate giants, is being built using Ethereum. Another massive announcement coming from Louis Vuitton and Christian Dior has revealed that Ethereum will be used to verify luxury goods for the fashion giants. Now, Consensus has teamed up with the fashion houses and Microsoft in order to build a blockchain-powered platform that allows customers to verify the authenticity of their luxury goods. The project is being called Aura. Now, it is based on the Ethereum blockchain and utilizes Microsoft Azure and has been designed to serve the entire luxury industry with powerful product tracking and tracing services, and will also offer ethical and environmental information, as well as instructions for product care and, importantly, warranty services. And our final story of the day is about our old buddies, Chainlink. The decentralized oracles are scheduled to go live on the Ethereum mainnet this month, which is super exciting. The decentralized oracles are designed to help smart contracts interact with real-world data, a key feature for many of the smart contracts which are being built that intend to have that crossover into the real world and require that real world data. This is an important move for both Ethereum and for Chainlink, as it will be the largest and most reputable decentralized oracle service to hit the Ethereum network to date. Thank you so much for watching today's video. As always, you guys are super awesome. So thank you for coming here and checking out these Ethereum updates. If you did enjoy it, leave a thumbs up on it. You can always subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.